11,000, so quite a bit of recovery from the low point. In fact, almost a 70-point recovery. We are at the high point of the day right now. Not saying much because the market is still down, but there's significant recovery. The problem for the market is that the large financials still remain under quite a bit of selling pressure. Names like IndusInd Bank and ICICI Bank, both these stocks down quite a bit. So that's the pressure point for the market. Let's see whether there's some short covering in last hour or there's some further selling. Right now, it's jury's out, and honestly, things could go either way. Surabhi, hi, good afternoon.
Good afternoon, Anuj. And exactly what you're saying is making me feel a little edgy and nervous. I mean, the differential between the Nifty and the Bank Nifty today is so wide. So is it that this recovery that we've seen, it's Thursday, so it's weekly expiry, is that the phenomena that's playing out? Because the way these banks are selling off, and some other big stocks like ITC, Reliance, I'm just wondering if this FII selling, I mean, maybe we just get one more big sell number today?
Not maybe, you will. So, you know, that there should not be any doubt about. But look, this Bank Nifty underperformance is not today's factor only. This month, in fact, if you see this month, just if you pull out both Nifty and Bank Nifty for the month, I think you will see the interesting dichotomy. For the month, the Nifty is down 1%. I think the Bank Nifty would be down 5%.
Bank Nifty, 5%.
5% down on Bank Nifty. Nifty is down 1%. Now, you know, now this is exact 1 month, which is also including the last 2 or 3 days of last month. But purely for this month, it's 1% and 5%. That kind of underperformance. And you know, the other obvious question is that if the Bank Nifty was down 5%, what prevented the Nifty from falling that much? And the answer is Reliance and IT stocks, Infosys and TCS. So, you know, this whole theory about one theory that you've heard ad nauseum, and it's played out in between a couple of times, a couple of days here or there, that money will finally move from IT into banks, into domestic stocks. That is just not happening. It's still, you know, today also Infosys has hit a fresh all-time high, you know, in a market like this. So TCS is almost there. So, you know, globally, if you see, in general, the gold prices still remain high. So I think we are still going through in equities that phase of risk aversion, and in hindsight now, it seems like that last rally that you had was a bit of a suspect rally, though, you know, that will be confirmed only if you break the recent lows, which was around 10,600, 10,700. Till then, you'll have to assume that the market's made some kind of bottom. But the way the Bank Nifty is selling off, and in fact, there's a fresh wave of selling now beginning on the Bank Nifty. Just look at that. And that's carried the Nifty as well this time round, Surabhi. So, yeah, not looking good over there. And let's see, I mean, if we are holding the low point, but it will be interesting to see if we hold it for long, because we started the show at 11,000. We're at 10,970, 30 points gone while we were talking.
Exactly. So this is a very, very tricky last hour that's coming up. Let's straight away get started. There's a lot moving on the screen and beyond. Here's what's lined up on closing bell. The market is still looking quite vulnerable, though the Nifty is off the lows of the day. Banks continue to be under severe pressure. The Nifty Bank is down over 1.5% right now. How is this divergence going to play out? What are the key triggers ahead? We get chatting with the fundamental experts, SP Tulsian of sptulsian.com. We also have Prakash Diwan joining us on the show today. Now, there's a lot of uncertainty that continues to loom on the market. There are lots of announcements that have come in from the government. But where does it leave us? Where does it leave portfolios? Is a bottom firmly in place? We ask the Alpha Manager of the Day, Harish Krishnan of Kotak Mutual Fund, joining in. It's FNO expiry. So how should you look at the sort of the wind up now, and what's the call out for September? Yogesh Mehta of Yield Maximizers with us on the show. And of course, as always, we'll have technical experts take you through the last hour trades. Prakash Gaba and Mitesh Thakkar joining in.
Okay, for now, the market is again down quite a bit, though not quite at the low point. And let's say it's very volatile. And this kind of volatility is something which is not new to us, but you know, it's just that on expiry day, there's quite a bit of selling. Axis Bank is down 2.5%. Mitesh and Prakash with us for the last hour calls. Good afternoon, Mitesh. Is there any trade here, or you know, is this the kind of market where you just, and if you didn't take a trade in the morning, you just, you know, stay on the sideline and let things play out? How do you approach the last hour and your stock calls?
So Anuj, I think, you know, we were looking at 11,000 breaking. We took some put option positions. I think they are still in place. The intraday averages are converging now at about 11,010 to about 11,025, and after that, the decline, the pullback which happened, kind of peaked out at 11,021. So as long as you're not capturing 11,025, 30 again, I think stay mildly short. I would not be aggressive here because it's a mix of signals between indicators. But I think the level is important. We are trading below the averages on the intraday chart. So 11,010.25 is the zone which I would look at, and 11,030, 35 should be your trading stop loss on the short side. But again, as I said, not aggressively short, but otherwise trading more on stock specific basis. I have a buy on Ujjivan with a stop at 288 for targets of 305, and Sun TV is a buy. Keep a stop at 440. Look for targets of 465.
Okay, so that's interesting. In terms of specific stocks, Nitesh is still going with a couple of buy calls out there. Prakash Gaba is also with us. Prakash, it's looking a little tricky. I mean, even this recovery, it's also expiry. On the index, would you have a trade for the next 1 hour? And then, of course, what about stocks?
I'd like to explain Nifty in a slightly broader perspective. Looks like there's a pattern formation going on here that may take around 6 to 7 days to unfold, trading days. It can even slide down to 10,800 or maybe 750 zones. If it comes there, it's okay, normal. If it doesn't come there, it's better. Structurally, it tells me, and then if it takes out 11,200, then we will maybe have around 400 points rally from here is possible. Then I would say the worst is over. To my mind, last trading hour or so, perhaps we could close higher from here. Maybe 11,000 is a possibility. Dips are buyable here. I wouldn't trade short here because can't be aggressive in the last 1 hour purely because of expiry here. So I would go long here. Bank Nifty looks relatively weak, but I'm not worried about it. Looks like Nifty is okay, should take care of it. Biocon looks good to me. Very good chance Biocon can climb to around 235 zones, stop below 222. And Sun Pharma also is looking good. Possible target on the upside is 450, stop below 422.
Okay, SP Tulsian of sptulsian.com and market expert Prakash Diwan now join us. Good afternoon. Mr. Tulsian, the stock of the day today has been Sun Pharma. Your thoughts on whether the worst is well and truly over for the stock, or is this a stock where there's still some problems?
See, Anuj, we have started taking a small buy call on the pharma stocks because of the maybe change in the fortune seen for the industry and the rupee having weakened to the level of about 72. But probably still Sun Pharma may not fall in that category. Still, we are keeping the select buy call on the stocks like Biocon, Arvindo Pharma, and maybe Divi's Lab. And then because I agree that the things have seemed to be quite on an improvement for Sun Pharma, but still we are keeping a cautious view.
Okay, and that's a call on some of the pharma stocks out there. Prakash Diwan is with us on the show as well. Prakash, overall on the market, first of all, this big drawdown that's coming in on bank stocks today and marquee names. I mean, you've got HDFC, some of the names like IndusInd Bank, ICICI Bank, SBI. It's across the board this fall. Your thoughts, and in terms of banks to buy now for an immediate trade?
I do agree. This is a pocket that probably did kind of start showing some promise when we heard the first round of policy response from the finance minister earlier last week, and it was expected that things could look up. But in the absence of a major capex cycle from the private sector, it's going to be a while. So while the good news is directionally in place, it's the timing or the elongation of that cycle that is still worrisome. So a lot of these banks will probably not find it very easy to continue growing in spite of liquidity coming back into the system, because the demand side, especially on the capital expenditure, capital goods spends from private sector, is still awaited. What looks like happening now is that you will have the market is finding it very difficult to make money even on the short side. So you look at, like, I remember after the Reliance AGM announcements, Anuj and I, we were discussing about, let's say, PVR, how much it would get impacted. PVR, I remember, was about 1450 at that point in time. It went below 1400, but today is 1550. So, in a market where things have already been priced in terms of the negatives, it's very difficult to make money even on the short side, because stocks could actually come back with a vengeance. But the banks, you'll probably have a lot of money coming into the better run banks or the more safer options out there. So I wouldn't be surprised if HDFC Bank actually draws more money. ICICI also sees some more money coming. SBI could probably start joining the rally. But at this point in time, given the headwinds that you have with some of the mid-sized private sector banks like IndusInd, RBL. Yes, things are difficult for the private sector banks as well. So it's not a great pocket, but I would believe the next round of announcements is going to be more related to real estate, maybe housing. Because the government has very clearly indicated that that's an area where they could expand the market by either redefining affordable housing limits or tax benefits related to acquisition of housing. So it's a dwellers market that is going to see some stimuli. And with that in mind, I think one of the best bets remains HDFC Limited, not the bank. I'm saying HDFC Limited. It has a lot going for itself in terms of market share gains, in terms of margin expansion, potential growth of a book at a lower cost. So I would be a bit picky about buying into the market at this point in time because we've seen the response to stimulus announcement also is a bit short-lived. So till structurally, it starts showing in earnings, and which could probably be another couple of quarters away, don't be in a hurry to really start allocating. Unless you're very sure that the trajectory is firmly in place.
Okay, by the way, the market's again recovering. So again trying to get back to 11,000, this time courtesy HDFC Bank, if you see the chart intraday. Mr. Tulsian, a word on Coal India. For a lot of people now it's essentially a dividend play, but at 188, is there any value in buying this stock?
See, Anuj, if you go by the news flow, then definitely the logic says that remain away because the 100% FDI having allowed in the coal mining for the commercial purposes. But we are keeping a positive view largely because of the dividend play and because of the PSU stocks. If you see the couple of days back, the kind of we have seen the rebound in many of the PSU stocks. Probably Coal India is also falling in the same category. And obviously, with this news flow coming in, you will not see the immediate entry of the FDI coming in into the play. Probably this has a leg of at least about 12 months or so. Even if we presume that the competition will be catching on, and definitely Coal India, because government will be very much concerned to see that Coal India ramp up the production, maybe beyond 700 million ton or maybe beyond 750 million ton, and that will be seen positive because FY19 has been a little laggard for the performance of the company. But I think that FY20 will definitely be seen some kind of hopes, and if the government thinks of divesting, the way divestment targets are set, then definitely the divestment will also be made in the Coal India, and that can see the share price moving up because of the maybe efforts put in by the government to fetch a better price. So overall, maybe in spite of this contrarian view, which is more of a psychological nature in the near term of the 100% FDI having allowed in coal mining, we are keeping a buy call on the Coal India.
Mm-hmm. Okay, that's Coal India, of course, in the news today because of the FDI announcements that came in. Let's look at some stocks beyond the Nifty 50 that are on the move. In a market like this, a dull market, Escorts definitely catches the eye. Escorts has managed a bit of gain on the screen, 4% up as we are speaking right now. Mr. Tulsian, of course, we will get the monthly sales data in just a while. How would you look at sort of some of these auto stocks which have already rallied from the lows, and does Escort merit any kind of a look at the moment?
So to be specifically on Escorts, if you see the 15 days data, which we have got from in the public domain, the tractor registration have shown an increase of 11% YOY. In fact, I have always been maintaining that July and August are always the dull months for the tractor sales. And come September and October, you will find Escorts selling 10,000 tractors and Mahindra & Mahindra selling 40,000 tractors. That means we have been keeping extremely positive on the monthly sales performance of September and October. But this time, because of the delayed monsoon, you have seen the disappointment in the month of July, where the sales were down by about maybe 9% on a YOY basis. But if you go by the data point till 15th August, as I said, state-wise the data have come where the tractor registrations have shown an increase of 11% on a YOY basis for the first half of 15 days. So that means the YOY numbers for the sales of the tractors by Escorts and Mahindra & Mahindra both will be seen rewarding. And in a dull month, if you don't expect any kind of fireworks to be seen in the month of August, then probably that will cheer the market. And come September and October, as I said, that I'm expecting 10,000 tractors to get sold by escorts in both the months, and Mahindra & Mahindra 40,000 tractor sales in both the months, that is in the month of September and October. So we are keeping positive view on buying on escorts, and that's a call. In fact, I've been giving for last 1 week since we got these data of registration, tractor registration on both, that is escorts and M&M.
Okay, fair point. And that would be something that the market would cheer, not just for escorts. If indeed tractor sales, like Mr. Tulsian is saying, if they are picking up, that would be a big positive. Make no mistake about that for the economy as well. Prakash, Diwan, what's going on with Petronet LNG? It's been, every day I see it, among the gainers, slowly, steadily gaining ground.
So, I don't know if there's anything specific in terms of the company's potential, extensions to the business, or any kind of monetization of some of their, activities. But it seems like, this is a pocket that probably is attracting the PSU, quasi-government-owned businesses that have visibility of earnings are the first ones that could probably, go off the block. So we've seen this kind of a trend in, let's say, NBCC, for example, the way it made a kind of comeback. I wouldn't be surprised if suddenly the defense stocks also start making headlines. So there's a very simple name like Bharat Dynamics. Ever since it came up with its IPO, it hasn't really created any great wealth for anybody. So last year, June, it was about 400 plus. Today, it's available at hardly any levels that you could kind of believe are expensive. But the fact that government spending will accelerate in some of these areas, whether it's strategic, whether it's tactical, but those are companies which have clear order books. You probably are not even worried too much about corporate governance issues especially related to leverage. And these businesses could start, in the long term, shaping up the way they were always supposed to be. So at the IPO levels, they were expensive. Today, they probably, give you some sort of respite because the market conditions are benign. But on Petronet LNG specifically, I have no other explanation why, it's been such a favorable move in the last many days.
Okay, those are some stocks hitting the headlines. We will take a quick break on that note. On the other side, it is the monthly expiry today. Yogesh Mehta of Yield Maximizers joins in for some cues. How will September perhaps shape up for the market? We discuss that on the other side.